Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for Wednesday, May 8th, 2024. Well, I hope everyone had a great evening and ready for another, crazy day here in the market with a massive amount of earnings coming in over the next couple of days. Let's take a look at what happened overnight. First off, if you remember, we had Neil Kashkari came out yesterday with comments suggesting higher for longer once again, which really should be no surprise, although the market seems to be convinced that jobs data all by itself was enough to convince the Fed to lower rates. Well, we're hearing from Fed members not so much, and that's having some impacts here in the market. If we take a look at Asian markets last night, Asian markets were mixed last night. We had Shanghai, Hong Kong, and Japan lower last night, with Australia and South Korea just a little bit higher, trying to move just a little bit up. We saw European markets this morning open up on the positive side, continuing to stay positive here, looking pretty good, with just a little tiny mix in that data. And then U.S. markets, well, we're struggling here just a little bit this morning as well. We're kind of fluctuating around the flat line. We've been in the green, in the red, and right now at this very second, a little bit of a mix in our futures and mostly flat. If we take a look at oil this morning, well, oil pushing back down. We have oil down 78 cents this morning at 77.60 a barrel. Brent is down 77 cents at 82.41 a barrel. And we have natural gas up 4 cents here this morning, looking pretty strong. If we take a look at our cryptos, I wanted to look at precious metals here first. They are all a little bit lower here this morning. Gold only down 10 cents an ounce, but we're seeing some bearishness across the board on those numbers. And then if we take a look at our cryptos, also right across the board, with Bitcoin falling this morning down 681 points. So what's going on there? Well, one of the things we're seeing as we hear from these Fed members, and we've got a group of them speaking today as well, we're hearing some hawkish comments, and the whole higher for longer thing continuing, with our 2-year bonds moving up at 4.83%. 10-year bonds also moving up just ever so slightly at 4.48%, and the 30-year bonds creeping up at 4.62%. So we continue to have this major inversion in these bonds, and just real stubbornness when it comes to that inflation. And so the Fed members are talking pretty hawkish about that. Let's see, I think that's all for today. So what does all that mean for this morning? Well, how about we settle in? Let's buckle up. Let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Hope everyone had a great evening and all rested up and ready for another wild day on this Wednesday, this hump day. Maybe we can get something going today. One of the things that we have been seeing here lately is we gap up in the morning and then we don't go anywhere. So if you're not participating in that gap, or if you're not already in that trade, well, not much happens throughout the day. But let's take a look and see what we've got going here. First, the diamonds. We are continuing to hold above our 50-day moving average and continuing to show that elevation here in the market, and very, very strong overall. Now, one of the things that I have said before is we need either a pullback in the market or a consolidation. Perhaps we're starting to see a little bit of that resting pattern in here, which I think would be very healthy. And that resting pattern above a 50-day moving average, if we could rest in there for several days, that would probably be a good thing. Unfortunately, we're in a market where it's just all or nothing. Either we're racing to the upside or we're running, to the door to try and protect ourselves in tremendous volatility. We needed that to change. We need that volatility to calm down here, because it has been a very dangerous market for folks trying to trade this. A lot of people being whipsawed in their accounts. So let's take a look. If you can notice here, as we've been rallying up, you want to take note that our volume has been declining since we started this move to the upside. We're running out of that inspiration to continue to stretch to the upside. We need something to give us that catalyst to continue that push. If we continue going to the upside, let's look where those bulls might be able to go. If they push up through that area right there in the chart, that would be fairly significant. And then I think past that point, we're probably looking at an area somewhere right in between there before we reach this resistance high in the chart. So if we continue to push on up here, I would look for those areas up in there as resistance. If we can break through here and get some kind of a hold up in here, then I think we could really be looking at a test of all-time highs in the diamonds. If the bears, however, were to engage and push back, first off, coming back down, testing this little level of support. You can see that runs clear back over here. Testing that level of support would be the likely place to try and find that initial level of support. If that were to fail, then I'm thinking maybe we come back down into here in that chart. We'll test maybe the lows of just a couple of days ago, testing the highs of 3-4 days ago, and then past that point, we'll probably be coming back down into this area of price support. Now, coming down into here would be a good place to find some support, because if we don't find support here, I want you to notice this big open gap here. If those bears were to push down into there, that would be a pretty painful pullback if we came all the way back down in there to fill that gap. And I still hold that as a significant possibility. Gaps tend to be filled. So we'll want to watch that pretty carefully. If we look at our SPY, SPY, also running out of energy here. You can see that we're declining here in our volume. We're not showing a lot of strength here. Now, big tech continues to be the driver of most of this, and the majority of that, 7 companies. 7 companies lifting the S&P 500, where the rest of the companies, well, we're trying to get some things going here. We're seeing some rotation, I think, into other areas of the market, and there is a noticeable rotation into more of dividend-paying type stocks, little safety plays. But if the bulls can continue to keep this pressure on the market, well, first off, we need to break through that recent high in here. And if we can break through that, then I'm going to start looking at areas right across here, and then that possibility that we're going to stretch on up and get all-time highs here in the market. Of course, we are holding nicely above our 50-day moving average, so you have to give that to the bulls. They are holding in there nice and strong. If the bears were to find inspiration here today, I'm going to suggest pushing right back down here to test this area of price support, that big black candle high here. We're going to maybe test that area in the chart. If the bears push beyond that and we slip beyond that, we do run that risk. You'll notice there's a bit of a gap here. Not a huge gap, but a bit of a gap. If we fall below the low of that little candle there, we might slip into that gap, falling on down, and then beyond that we'll be looking at a level in here. And you also want to notice, if we really started to push on the bearish side, well, there is that big open gap. And I know when we look at stocks, things like that, everyone says there's no way we could fall that far or fall that fast. But I just want to draw your attention to these big black candles. We have thought that before, and then all of a sudden they tear the heart out of the market and really come in strong. So we'll want to watch those things pretty carefully. The hype around earnings, and boy, it is hype around earnings, then that has probably that biggest potential of keeping us up. And if we can get some of those corporate buybacks to begin, well, maybe that would help an awful lot as well. Our QQQ pushed up really strongly, leaving a couple big gaps behind, breaking that downtrend here in the chart, looking very bullish. And if the bulls can continue to show that enthusiasm and strength, first off, we need to break that little high right there. We need to pop through that little high. If we can do that, then I think there's every reason to believe we'll be coming up in here. We'll be looking for these next levels up here, and maybe even stretching on through to all-time highs here eventually in the QQQ with the strength and just the absolute focus into the tech giants. There seems to be no price people are not willing to pay for those tech giants, and we're pushing and pushing and pushing in that area. If the bears were to find some inspiration, well, first off, I'm going to look for a retest of this trend right here, push back into here. If that holds, then we're golden. If we slip beyond that, I think we're going to come down and test the low of that big white candle there, and possibly even slip just a little bit lower into this gap. Beyond that point, we would push down into this price support. You can see it runs all the way across over here, push down into here, and that would be a test in here as well as that upside trend in the chart. Now breaking down below there, here's where it gets a little bit nasty again. Notice this giant gap in here on the QQQ. If we were to fall into there, we're going to create another one of those really nasty big black candles in the market. So watch that carefully if those bears find some reason to truly engage here in the market. And there are certainly reasons where that possibility could occur with all this geopolitical strife going on in the market, and the potential that we hear more from the Fed members that they continue to talk hawkish, and we start seeing those bond yields going back up. If we take a look at our IWM left a little bit of a shooting star in there yesterday, pushing down. So if the bulls can continue to push to the upside, we need to see a break of that level. If we can break through there, then we're probably looking at some of these upper areas in here in the chart to try and test as we try to push up into this resistance area of the chart, which happens to be a very big resistance area. We've tried a couple of times here recently to get through there, but you'll notice we have a multi-year resistance here in the chart. So we'll want to be watching pretty carefully for that. We're seeing a little bit of bearishness in here this morning. If the bears were to push that lower, I'm going to suggest right in there first. We'll test that area as support. And again, if that holds, we're in pretty darn good shape. If that were to fail, then I think we're probably going to slip on back down and maybe test this area price support here. And we might take a look at this upside trend to see if we can hold. That right there, if we were to hold in this area, would be a very bullish thing for the market, I think, and probably a very healthy thing for the market to do, is just rest that back and find a little bit of that price support and build a little bit of a base so that we can bounce from it. If that were not to hold, you will want to notice we do have this gap here. We could slip back down below to fill that gap in the chart, and once again probably disappoint the market pretty heavily if that were to occur. Let's take a look at our VIX. Our VIX, our VIX continues to show us really no fear at all, and even as bond yields are going up, no fear here in the market, no fear on the geopolitical situations as Israel has rolled into Gaza. Nothing seems to phase this market right now around earnings and this desire to see the Fed cut rates. And I made comments about this in the trading rooms yesterday. You know, we continue to see stories on the fact that everyone is hopeful that the Fed is going to suddenly pivot. But I want to remind everyone that we have had those stories now for like 18 months straight. And every time so far they have been wrong. Wrong. So we continue to build this hype in the news cycle about this. But so far, the Fed is continuing to stay on course with what they keep saying, higher for longer, higher for longer. So be really careful with this idea of betting that the market is just suddenly going to flip. We continue to see this VIX fading in the market despite the volatility that we're seeing. And if we continue that process, I'm going to say we're going to reach an area of complacency here in the market, and that's if something really cracks here someplace, we're going to get a big reversal. I'm not going to predict that's going to happen in any way, shape, or form, but I don't like to see when the market just gets so over or uber confident that we start becoming very, very complacent, because a lot of folks will get hurt in a market like that. Just watch that carefully. I think every reason to believe that we could continue to push down. If the bears engage a little bit more today, we might get that little bit of a lift back up, might be up here testing some of these areas in the chart. If we take a look at our T20s, our T21-22, well, we left a little bit of a hook over there on yesterday, just showing that just a few more stocks selling than were going up yesterday. That's all that really is. But you will often see when we leave those hooks up here, I call them hockey sticks in the air. Yeah, if you know anything about hockey, if you have your hockey stick up in the air, it's called high sticking, and you end up getting sent to the penalty box. So you can see these periods of time when we get that hockey stick up in the air, we tend to have that little bit of reduction, a little bit of selling comes in. Not a sell off, just a relief of the buy pressure in here in the market. But that being said, if we can find enough bullishness in these earnings results and things like that, there's every reason to believe that we could push right back up into that bearish reversal zone. We've created a little bit of room yesterday in that little bit of a pullback to help out. Now, if those bears find inspiration today, well, then of course we do want to recognize the fact that we have a big downside opportunity if they find some reason to engage. Not suggesting they will, just watch for that carefully. If we take a look at our T2108, well, T2108 also left us that little hockey stick in the air, showing us that that momentum has just really been kind of fading as we rally up. We saw that in the volume of the trade, but there's really nothing terrible here. We just slipped just below that 50% area here of stocks holding above their 40-day moving average. So kind of keep an eye in there. And by the way, I don't know why they picked the 40-day moving average for this indicator. If it were me, if I were king for the day, it's going to be the 50-day moving average, but nobody asked me. And so the 40-day moving average, you can see we slipped a little bit. We're a little bit below 50%, but we're hanging in there just fine. We've got a little bit of price resistance in here, and we've got some price support too if the bears were to push back here. So watch some of those areas in the chart. And then if we look at T2107, well, there again, we have that hockey stick up in the air and maybe just running a little bit short of enthusiasm here at the moment. So watch that carefully here in the chart. We're coming into some price resistance, as you can see right through here. No big worries at this point at all in here. You can see if the bears were to engage, we've got some good support levels below, and we're not going to threaten that 50% area here unless we push all the way back down into here, and right now there's no evidence of that. The bulls seem to be just too strong. And if we take a look at our T2101, well, our T2101, interesting yesterday. We had that little tiny bit of selling coming in, but we did see an increase in breadth. Now, most of the indexes ended up the day holding up pretty well, But we have that little bit of concern here with that breadth coming up. Now, perhaps what we're starting to see is some of that corporate buyback action starting to sneak in here. We'll have to watch carefully for that possibility. But breadth hasn't been all that impressive this week since the big gap up, so we'll want to be watching that carefully. Let's take a look at our economic calendar for today. And our economic calendar, we have a bit more on that economic calendar today to be paying attention to. So as you can see here, we have mortgage applications that will be coming in here this morning. We've got wholesale inventories, and they're looking for those wholesale inventories in the consensus of dropping to a negative 0.4. They were a 0.5 last time, so keep an eye on those wholesale inventories. We got a petroleum status number today. Of course, the way oil has been acting, that's going to be really important, so pay attention to that. And then, boy, just bond auctions and a lot of Fed talk. We've got Jefferson, we've got Collins, and we've got Cook that will all be speaking today. So keep an eye out for those. There is a 10-year note auction in here at 1 p.m. Eastern time. That would be another thing to be paying attention to. Those 10-year bonds have been falling back. They're getting a little bit stronger here this morning, so watch that carefully. As you plan into Thursday, remember we're going to run into those jobless claims tomorrow, and that's really about the only thing that is of major consequence on the Thursday economic calendar. Let's take a look at our earnings calendar, and my oh my, do we have a busy earnings calendar today. There's no way I can cover all of these this morning. Not even going to try today, but we do have quite a few stocks that will be reporting this morning, and those reporting this afternoon as well is a big list. And honestly, tomorrow, it's over 300 companies will be reporting now. Not all of those will be notable, but make sure, folks, that you know how to get to the blog. If you go just below the title of the video, there is a link that will take you to the morning blog so you can get that full list of notables. So take a look at that here this morning. We have already heard from some stocks here this morning, like Bud getting a really nice pop here this morning. Sales improving there for Bud. EDIT reporting, EVER will be reporting nice pop going on that one. DINO. So quite a few reports that we'll want to be paying attention to and could have, honestly, an effect on the market today. UBER, Uber, feeling a little bit of pain this morning as some of these reports come out. So let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and then also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor and click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Remember, I know I certainly understand it gets monotonous day after day after day, but also I want to, thank everyone who continues to support the channel for the effort of putting these videos out every day. It is very helpful, and thank you so much. Even an emoji counts. So thank you, everyone. And as you know, I do try to answer those comments. So truly, truly appreciate it. Let's take a peek at some stocks that could be setting up. Remember, everyone, these are not recommendations to buy or sell any security. You need to do your own due diligence and be very, very careful in the market. Follow your trading rules, follow your trading guidelines. Never, ever blindly follow anyone else's trade ideas. First off, let's take a look at our US dollar here. Well, one of the problems that we have going on here with US dollar, one of the reasons we're probably seeing cryptos and precious metals and commodity prices pulling back is because the dollar has been strengthening. When we see the bond yields going up, it puts more pressure on that dollar to the upside. We also have this currency, this major currency problem that Japan is having here with their currency as it continues to fall, adding some upside pressure here to the US dollar. So we'll want to watch that pretty closely here. If those bond yields continue to strengthen, we could see that hold above this support area here in the chart. And that could make for some tough times here maybe in the market for a little bit. So just watch that carefully. Let's take a look at a few other places here in the market. How about this ETHE? ETHE setting up here for a potential. Notice that we've got this downside move going on in here in that chart, but we're trying to sneak out from under that little downtrend in here. If this were to hold this higher low in here, there may be that opportunity that could push on up. I think it's worth paying attention to it. This was actually brought to my attention by one of the members of the trading room, and I think it does have some potential interest in here. So watch that carefully in that chart. Now, if those bears were to really engage here, you can see with the resistance that we have in the chart, if we were to continue to fail and break that low, well, then all bets are off for that upside move. We're going to continue that downtrend. So a little bit of uncertainty in here, but watch that closely. How about Johnson & Johnson? J&J, we're seeing some moves in some of these drug makers that we haven't seen in some time. Breaking this downtrend, and notice as we pop through and we're trying to hold in that area, one of the things I always look for a bullish chart is I look for those charts showing me that first higher low after a downtrend break, and then I look for that upside to come into play. And you'll see it happens over and over and over in charts. When we hold those higher lows, we get that bullish run starting to happen. So watch that carefully. We've got this nice little W formation, and then we broke the downtrend, trying to hold a little bit of support in there. If those bulls can step in and push up, might be something to watch. Boy, one of them that really got going in a big way here was Pfizer. Pfizer pushing up dramatically here, pushed through a resistance, and then yesterday finally got slowed down quite a bit. I would watch Pfizer carefully in here. There may be a little bit of price support right through this area right in here. So any kind of rest, consolidation, pullback in here sets up an opportunity, and we have what we call a rounded bottom breakout pattern here in hit and run candlesticks and right way options, and that's where the market, we push back up above a downtrend here. We break through that 50-day, we come back, we hold it as support, and then we start looking for the 200-day moving average as a target. So kind of keep an eye on that. We have a pretty decent setup potentially coming here into Pfizer. You know, a chart that I've been watching an awful lot here recently, and earnings kind of messed up the whole thing, but as you can see, PayPal is starting to show signs here, and we've been seeing some of the pay systems trying to hold up in here, trying to show a little bit of bullishness. PayPal holding above this resistance in the chart, and you can see we're trying to consolidate after earnings out toward this trend. And I got to tell you, particularly when you look at this on a weekly chart, this is where I'll be trading, is in that longer term swing in here. Beautiful potential setup in this chart. Probably needs another week or two of rest, but watch that carefully. PayPal could be coming around. I think it's worth paying attention to. Take a look at 3M. 3M, I mentioned this yesterday, continuing that little resting pullback into support here in the chart. Watch that carefully. If we can find buyers in here, if that starts pushing up, we might resume that upside trend right in this area of the chart, and then we'd start looking for these next targets above. This is quite a bottoming formation that's happened here in 3M. Good, solid dividend payer here, as you can see, and we would be looking for that next upside move in that chart. So keep a close eye on that. By the way, if I were to take this trend line right in here and slide it over there, you can see that that would not be a bad location for that to find some buying support and potentially come into a next move to the upside in that chart. Also take a look at Altria. Altria continuing to set up in here. We're resting in this support area of the chart, and that area runs back here quite a ways after breaking that downtrend. Now, albeit this has been incredibly volatile, but you can see what we've got forming here. This is what you'd call a V bottom. We've got this little stopping area right here and this little stopping area right here. So a person could look at this and say, hey, that's a massive inverted head and shoulders pattern. Watch for that next opportunity there in Altria. Could move right on up. And you can kind of see some of that bullishness starting to form up here in Philip Morris as well, breaking that major downtrend, trying to hold in here. Again, those big, strong dividend payers doing well. I continue to mention utilities, and my goodness, utilities showing lots and lots of strength here to the upside. Now, typically you're not going to see utilities perform like this in a market that is as confident as the VIX is showing us. But what I think we are seeing here is we're seeing that rotation into more of those safety plays in the market and good strong dividend paying, and utilities being very, very strong here with a beautiful bullish pattern that I was mentioning, and that continues to run to the upside and looking pretty good. Now, if you're looking for any short trades, there certainly are some trades out there to be thinking about on the short side. Take a look at FedEx. FedEx is not looking so good here. That possible failure of this support area, the next area of support would be down here in that chart. And we certainly seem to be drifting into that area. So watch that carefully. If we take a look at some of our big industrials, we're rallying back into downtrends and price resistance areas of the chart. I would be watching carefully right in here for that possible failure and that move on lower here in Caterpillar. It's going to have to get out of that downtrend and that resistance area and hold a higher low up here before I'm going to change my mind on that. Right here is where we would expect to see a failure if there's one to occur. So I would watch carefully for that. And then, of course, in the oil sector, there is a lot of stocks showing that bearishness here. Take a look at PSX. Very bearish. We look at Halliburton, that's setting up in a bearish pattern as well, moving in that downtrend. And, you know, we can just see that in a lot of these stocks. Occidental setting up for a potential short here to the downside. So keep an eye on those unless we see something geopolitically that changes this, or that petroleum number today that really changes sentiment in here on oil. Right now we've got a pretty good down move going on and worth paying attention to. Let's take a look at our financials. There is some stories out there starting to come out that our commercial real estate problem is really starting to add up and turn into a major issue for these banks. Now, when we take a look at the major banks, there's not as much impact here to them. But if we start to see smaller banks, regional banks, starting to fail, and there is a very big risk that that could occur here soon. The weight of that commercial real estate is getting heavy. And I would suggest if that does start to occur, we're likely to see that draw down other financials as well. So keep an eye on this. We have crossed back over that downturn. We're holding that uptrend in here, and we're pushing right into this resistance to see if we can break through. This is still holding in a very, very bullish pattern. So any rest back into here would set up that next opportunity to the upside in our major banks. However, if we start to see some of those, and it's still a big if, some of those regional banks are really struggling, if we start to see them falter just a little bit. And we do know that one of the reasons that the Federal Reserve is cutting their balance sheet roll-off is that there's a bit of a liquidity crisis going on. We're continuing to see banks restrict lending and making those lending standards tighter, which is actually destroying money in the world because we create money with debt, and that's becoming a problem here. So we also have Janet Yellen working buybacks of bonds, buying back low rate bonds from the banks to supply them with higher rate bonds, in an effort to try and help out those banks and help their balance sheets. So kind of keep an eye on there. There's some pressure building. I can't say that it's going to come to a head anytime soon, but I would be keeping an eye on that, and particularly on some of those regionals. Now, KRE in those regionals are continuing to show that pretty substantial bullishness, pushing back up in here, as if that regional banking, or as if that commercial real estate situation is not a problem. And maybe it's not, but there's some stories coming out saying, hey, this is not getting better. So watch that closely. If we suddenly see some of these smaller regionals have a major problem and start to falter, we could really see some pain coming into those financials. So just watch that carefully. So with that, everyone, I've run this video long. I want to wish you all a fantastic day. I want to wish you great results in your trading. Thank you so much for being here. Thanks so much for supporting the channel. I really appreciate it. As always, I want to wish you the very, very best today. Great profits, and I'll see you right back here bright and early Thursday morning. Take care, everyone.